I guess we'll get started anyway. So hopefully our fourth panelist will wander in shortly. So this is the penultimate sort of panel focusing on the investment side. Obviously, following to Shum's great presentation. So I think first we'll just do some quick introductions for folks, what your role is at your company, what your company's focus on, especially as it relates to investment and M&A. So myself, I'm Josh Burns, founder of Digital Dev Connect. I'm working with developers around a lot of key business areas. Oh.
Right on time.
Perfect. I did the same thing this morning, don't worry. Working with developers around key business areas, including some stuff around investment, especially around companies in the Asia side. So Michael, why don't you go next?
I'm Michael Ritter. I'm CEO of Maple Media. We're a mobile media company focused on acquiring mobile apps.
You guys have already. No.
All right. Hi, I'm LK Shelley. I'm the managing partner of Affinity Ventures. So we invest in technology startup, and one of the pillars we focus on is also mobile gaming.
John Robinson. I recently joined Bessemer Venture Partners. We're a local venture firm in the game space. Most notably, we did Twitch and Playdom and OMG Pop over the last few years.
Awesome. So. Just to kick things off, I mean, I'm going to call on Shum's sort of presentation and the question. So if we look at like the mobile gaming side from a content perspective, do folks agree that there really isn't much of an opportunity for studios to raise funding in the climate that we're currently in? And if you agree or disagree, like, is there any sort of profile of companies where there is more opportunity for fundraising?
I would say I think there is a lot of opportunity. I think you're seeing a lot of people who've got a lot of expertise at some of the biggest game companies, and I think that they're going to start splitting off and start doing their own thing. I think the cost to make kind of an initial game is still fairly low, so like the barrier to entry is low. So I think you can get a good game done for with like a seed round or friends and family round, and then I think after that there's a lot of appetite at the Series A, Series B growth stage for the companies that have any sort of traction.
And so that's basically studios that maybe have track record from their previous companies.
Yeah, I think there's more opportunity on the earlier side of, you have a good track record creating apps or games. But I think it's tough when you've developed a game and you're looking for user acquisition. I think that's kind of the tough place. I'll see a lot of publishers or developers coming to me and say, I've created this game and it's a great game and maybe it has good KPIs, maybe not, but they want UA investment. And I think that's kind of the tough point to get investment. Like, there's a lot of people that want.
I agree with you 100%.
UA. I think if they're coming with UA expertise, that's one thing, but a vast majority of them don't. And to throw dollars at UA is just not, personally, I don't think is very good investment. So I would encourage studios or publishers to come in either way before that or have a different proposition than I need UA.
Yeah, so I very agree. Basically, you either like have a very good concept and then reach out to, like, for example, VC, where we sort of bet on the future value rather than just looking at your existing metrics. Or you could also, I think, nowadays, I think there are lots of strategic investors. So even in Europe, recently I met a studio in Berlin about 2 months ago. I heard the story. It's a good sort of team from a sort of AAA studios background, but I didn't think it was investable because they raised about 2 million before, and then they developed games that didn't even have any traction. But now I just heard that they raised 6 million.
Yeah, it's treasure hunt.
Exactly. So I didn't want to mention it.
Yeah,
I just was surprised. Like,
no, I did not see that coming. I mean, I would say that, again, to my point before, I think, and I think John mentioned it as well, it's if you're in a situation where you have a great track record, you've operated a very viable top 200 grossing game, you've run UA, you understand what it takes to scale that, live ops. I mean, if you understand all those functions of game, okay, you got a chance. VCs will look at you, VCs will talk, they'll understand, you'll get into the funnel, you'll get meetings. Otherwise, if you're 3, 4, 5 guys in a small studio, and you have a great game, you're going to get a publishing deal. You're not going to get an investment, especially if the guys don't know you. If you haven't come from big game companies, you're going to get a publishing deal.
Is there other sort of, or how does the studio sort of best position itself for fundraising? I mean, obviously we talked about, having that track record, having expertise for like the publishing side in terms of marketing UA. Any other sort of insights around stuff that kind of catches the eyes of investors, especially from the perspective like institutional investor versus like, John used to work at Nexon, like folks on the gaming side that are doing investments with publishing. Any sort of other aspects or ways to position yourself for the best sort of potential opportunities?
I would actually advise the smaller studios to think about who the ideal investor would actually be, and in a lot of cases I don't think it's a big publisher or a traditional kind of like financial institution, but rather angels or people who understand that these can be very good cash businesses. And so I think it's really about, before I was at Nexon, I did an indie game studio and really aligned kind of like my investor base with our goals. And that was really, we were focused much more on creating a great, stable cash flow business as opposed to swinging for a multi-$100-million exit, because I think the cash flow business was a much more straightforward path to success than traditional venture style backed business.
Yeah, then, if not, I think that's a great suggestion, but I'll throw out a different one, which is maybe go off a strategic partnership that could help. Most people want, I said it earlier about UA, most people want investment for user acquisition to grow the app, but maybe there's a strategic partnership, whether it's a brand or some kind of media company that specifically makes sense for that game that can help kind of drive the promotion or the users that you need.
Yeah, I'm always surprised when I see small game companies when they get funding, and I haven't heard of who it is, but it's usually local partners. And I just think that's a smart thing. Like, go find people who are interested in backing you in that region, who can help you with your network, who can help you build your team, and who understand the business and trust you. I think that's much better than bringing in an institutional investor.
So when you're raising funding for your game studio, like how did you source those sort of seed or angel investors? Is it just your network, or any insights to share around that?
High net worth individuals who I'd work with, friends of friends. You really just gotta kind of like scratch together the
angel
round
list.
you can.
Just be super resourceful.
And so the sort of strategy around that type of person, is there not, in terms of like the profitability expectations, things like this, is going to be more realistic?
Well, I think especially at the early stages, people are betting on you more than they're betting on the idea of you creating the next Supercell. And so I think it's really about those personal relationships.
Cool. So I think one interesting thing I wanted to touch on that a couple of you guys have been involved is the idea of sort of this buying and selling of actual like products or games. Michael, obviously that's a lot of your focus, and Shum, you did a deal with Gree for one of the games. I'm curious to get your guys' insight of like, this is kind of a new way to raise capital for companies that may be smaller that have a product that performs well, or is a legacy product that drives revenue, and they can then shift that into like new products.
Yeah, that's exactly what we talk to publishers about or studios about, which is you've developed a good game. Maybe it's not a huge home run, but it's a good game, drives steady cash flow for you. But maybe there's a new game in the works that you have high hopes on, and we see ourselves as a good kind of financing of it, which is sell off your current game, generate the revenue that you would accumulate over a certain time period up front, because there's a good, there's a time value of money. Invest that money into your new game, which in theory should have a better return, and then you'll be ahead of the game. You didn't give up equity. You didn't really give up any debt, and a lot of times the archived games or the historic games are really dragging studios down because they're spending a lot of bandwidth on those games. They're worrying about it. They're thinking about it. When it doesn't drive enough revenue, or it doesn't have enough upside for the studio to really be focusing on or spending that time on it.
Yeah, I think in the case of Dragon Skull, this was a game that was performing exceptionally well. It was growing like a rocket. And it was a title that Gree felt internally they could really run the live ops, really add value in terms of UA and marketing. That was the thesis. And you know, it served the shareholders of Pear Blue extremely well. I mean, they cashed out handsomely for this title, and they felt, you know what, great, if you guys think you can do a better job, here are the keys. And you know, they've used the proceeds of that to go and, you know, develop another couple of titles, and have a lot more financial flexibility now. What I also see is actually some larger publishers thinking about titles that don't perform as well to then outsourcing those, you know, through rev share and royalty to smaller players. So haven't personally been involved in that, but certainly know of a couple of studios that are doing that actually actively, that came from large publishers, but now are actively running studios and scaling them outside of California, but then taking these older, you know, catalogs of games and actually increasing them.
Yeah, I think Kabam was pretty successful with that strategy, both on the mobile side and PC side, and I think it's a really viable opportunity for people who want to move on to the next thing or take another big swing.
And so what are the characteristics of these products? Is it purely like, what's the current like daily monthly revenue that's meaningful? Are people looking for other, maybe like an under-operated game that they can do more in terms of events to boost the revenue? Like, what's the kind of profile of products that people, like, you know, Michael, what are you interested in? Like, what are folks seeing people are interested in? Because my hypothesis is that like a game in soft launch that maybe has decent metrics, no one's interested in buying something like that. What is the stuff that people are really interested in?
Yeah, we might, I don't know if we're similar to most or different, but we look at the users. So we look at the number of users, the growth of those users, whether it's increasing, steady, declining. I mean, the vast majority obviously are generally declining, but at what rate are they declining, and what does it take to level that decay off? I think there's definitely a kind of threshold of users. We look at maybe 10 or 20,000 DAU as like a bare minimum of users that really matter, where you can actually drive an impact. But for us, it's really about the growth or decay of those users. Although I think a good amount of studios also might look at retention. You know, day 1, day 7 retention. I used to work at Jam City, and day 30 retention was really important to us, but usually day 30 is driven by content and a lot of apps which aren't performing very well. You know, you don't support them with content, so day 30 is probably not as good as they should be.
Cool.
I've seen actually a scenario where actually I got asked to buy a casual game studio. They have a lot of users, but they don't have, I guess, new games idea. So they sort of looking for new games that is not been in the market that long, but they have a good sort of soft launch metrics. So even just a small soft launch, so small scale, and they would be willing to just pay and buy out the whole IP and then just plug it into their network, their infrastructure, and then they operate the game. So that happens.
Cool. So obviously, love to touch on Asia around both M&A and investment as it relates to the Western market. Would love to get sort of the latest. I know Sean, you obviously shared stuff already, but love to get like everyone's sort of insights. Like, what kind of opportunities are companies from Asia looking for in the West? And Michael, you were at Jam City and, you know, raised a lot of money from Netmarble and working with like companies in Asia. And John was at Nexon. So yeah, we'd love to kind of get what's the profile of stuff that's interesting for folks from Asia on the gaming side. Yeah,
for us at the time it was called SGN, and we changed the name to Jam City. So I apologize. I still refer to it as just GN. We received a fairly large investment from Netmarble of 130 million. It was about a year ago, or a year and a half ago. And at the time, and now recently, they acquired Kabam, and they recently went public in Korea. But they wanted to extend their reach into the U.S. So it's interesting that they made an investment with us in Kabam, and they really let SGN, the team, run the company as a U.S. entity, and run it as we would. A lot of Chinese investors have been coming in too, which is a lot of people talk about how they're trying to get U.S. dollars to exchange Chinese currency into U.S. dollars. But I think a lot of those players, or a lot of those people, are really kind of knocking on a lot of doors and evaluating a lot of businesses and making a few deals. So I'd be tempered by a lot of those types of people come into the market. There's a lot of them talking, but few making deals.
Yeah, I think for the major Asian players with large balance sheets, specifically the Netmarbles and the Nexons and a few others, I think they're looking for really like tentpole titles. And Netmarble with Jam City, with Kabam, Nexon with big, huge games. I think they're all just looking for studios that can say, this is our genre and we are number one or number two, and that's kind of what we own and that's what we focus on. I think that's much more appealing than kind of like a broader portfolio or just a strong cash flow business for most of the biggest acquirers.
I mean, I know specifically for Netmarble that they really enjoy, and actually a lot of Chinese companies, they really like IP. So especially in like China, IP is pretty important there. And it's probably not coincidental, but Netmarble acquiring Kabam, they both share the Marvel IP. So I don't think there's a coincidence there.
Cool. Any other?
Yeah, I mean, I would generally agree with a lot of that. I think that, yeah, certainly Chinese players are speaking to everybody. There's no doubt about that. But I think they'll continue to be more acquisitive. I think with both companies like Netmarble, Nexon, Korean or Japanese for that matter, they're very specific. And for a lot of the mid-size or even smaller, becoming mid-size players, they're courting the Chinese players hard. And there's no doubt about that.
And I guess, in my experience, I thought several on the kind of larger size studios, they really look, they pay attention to EBITDA, they pay attention to growth. It's not just top line revenue. And, early on, I'd say like 2 years ago, it was all about spend as much as you can, grow it top line as much as you can. EBITDA is irrelevant. For us, at least, EBITDA, or when I was at Jam City, EBITDA was very important. And I think it's going to continue to be even more important as as the market matures.
John, when you were at Nexon, like, how did you guys evaluate investment opportunities, like, at a high level? You can share any sort of
I think it was really just around kind of strategic value, like taking what Nexon was good at and kind of extending that to new geographies or new genres. Okay. And that was really just about taking games which we thought were performing well but could use more expertise around live operations or scale, basically.
Okay, cool. So in terms of M&A trends, I mean, obviously, Sean touched on this a bit. I mean, it seems like on the Western side, stuff will be fairly limited. It has been limited. I mean, I know, Michael, you were at SGN Jam City, and you guys did some acquisitions. I mean, what was the sort of strategy behind that at a high level? Was it focused on just like adding different genre expertise? Was it purely from like a financial perspective?
No, yeah, it was actually the first one, which was, expertise in certain game categories. For us, we knew we were very good in puzzle, and we wanted to expand out to other genres. And it's one skill set to make a puzzle game. It's another skill set to make a casino game. It's another skill set to make a simulation and time management game. And I think you guys would agree it's hard to be good at all those genres. And I think there's studios out there like Zynga and Glue and some of these bigger guys that are kind of realizing that they can't have all these kind of random game categories, and they need to fit together in a certain way. You can have certain expertise in certain areas, and I guess the latest acquisition of TinyCo, which was about 8 or 9 months ago, was really to gain strategic expertise in a certain game category.
And Sean, you talked about the deals. There'll be deals potentially in the West, but they'll be pretty small scale. Is that aligned with kind of what Michael described, the reasoning behind those, or?
Well, yeah. I mean, I think for a lot of the U.S. studios, again, just because you don't have the same market appetite for gaming assets, and a lot of that has been attributable to the difficulties of Glue and Zynga over the years. So you have this then domino effect for all other companies. And it's really prevented a lot of interesting North American or European players from going public. Of course, that's changing now. There's at least some interesting companies coming to market now in Sweden and Finland. Until that changes, a lot of U.S. companies, from an M&A standpoint, they're going to be, just really not that interested in buying companies. I mean, they'll make choice acquisitions, which are near at home on the West Coast, immediately accretive. I mean, who's not going to do those deals? But for something more significant, or that's going to be company transforming, they're going to be a little bit more cautious.
And where most of the focus be on like that strategic value, like Michael talked about in terms of genre expertise, hopefully being also profitable. Is that kind of the?
I think being profitable is, as he said, you know, it's critical, super critical right now. I don't think it's a nice to have. It's absolutely critical.
Yeah, I actually think the M&A market is going to change pretty significantly in the next couple of years. There's just been so much cash accruing on the balance sheets of Activision Blizzard and EA. Tencent will continue to be aggressive. Netmarble, Riot, Supercell. I would expect all of them. They're already investing so aggressively internally. They're gonna need new avenues to continue to grow at the rates that they have been, and I think external investment is going to be primary opportunity for them.
Yeah, when I was raising money for Maple Media, my pitch was EBITDA is the new IPO, and just want to shout that out here that EBITDA is the new IPO.
But I guess I think there would be more adjacent sort of players from different industry buying gaming companies to expand their monetization. Right? Even like Amazon could be buying another.
We saw that with Fox, right?
Exactly, right? So there are more and more of those kind of crossover acquisitions.
Yeah. MTG as well.
Yeah. And then also like random ones like from farming or like whatever.
Yeah.
Chinese.
Always the random Chinese Chinese strategy. So you know, we're kind of getting close to the end here. We'd love to kind of get feedback. You know, again, we touched on this a little bit in the last session. You know, emerging areas, AR, VR, eSports, location-based games, stuff like this. I mean, how do you guys see that playing into like the interest and appetite from investors, especially as it ties to like the mobile gaming space? I mean, do you see the sort of appetite for investment, even early stage, still existing, or is that kind of past already? People getting in early in those areas. Any sort of insights there as folks think about sort of integrating that into their strategy or pitch for their studio?
Maybe I'll just add one more thing to your list. I'm not that interested in VR. I think it's a bit too early. But recently I've been looking at Bitcoin, how actually Bitcoin can facilitate more microtransaction. So like people actually can trade items, virtual items, at a much lower value and doesn't cause any overhead cost. So I think that's something could at some point picked up, but now it's really early stage.
I think Shum said it well when you were closing your previous speech, which is it's not going to become interesting until people start making real money off of that platform. And you saw that with Facebook, which actually Zynga started making huge money off of Facebook. And I think Facebook learned early on that if other people can make a lot of money off of us, then we can make even that much more money. And you haven't seen that yet in the sector, but as soon as that happens, then I think it's become a lot more interesting.
John, working, well, I've been there a little while, but I mean, how do you guys look at it as an institutional investor at these areas? Is it just the time has passed, or the stage of your investments just doesn't align?
I'd say we're interested in everything right now. We look at like, it's a very, very healthy market across the board, PC, console, mobile, eSports is growing. Like VR might be in like a trough of disillusionment right now, but I could see that bouncing back. So if anything, now might be a good time to think about what the next 3 to 5 years might look like in VR and AR, and start finding good teams now.
Cool. Any questions from the folks in the audience? Yeah.
So the question is, back to smaller studios. So say you have a small studio with a low single-digit million of dollars in revenue right now, right? For those, what would be your advice for studios like that? Because it doesn't sound like there's a lot of exit opportunities for those kind of studios. So if you do those guys, should they just try to build themselves up to be a larger market at some point? Or I mean, just interesting thoughts.
Well, I think maybe I alluded to that a bit, but perhaps I didn't, kind of articulate it better. But I would say, really, if there's certain functional aspects that you do well, or let's say a particular genre of games you do well, or let's say you have great development capabilities, but you're lacking UA, then it might make sense to find other like-minded players, who have those, let's say, functional sets or focus on parts of the value chain that you may not, and merge with those companies. That's generally, in a competitive, maturing industry, probably one of the smartest things to do, provided, of course, you find a deal structure that makes sense.
Yeah, I guess my advice would be, and maybe you're doing it already, but sometimes I experience even like kind of indie studios spreading themselves too thin. They don't want to put too many eggs in one basket, which is generally the advice. But I'd actually say to get really, really good at something. Because if you're really, really good at that one thing, you're going to be better than the others. And that's what's making people interested in you.
Cool. Any other questions? No? Cool. All right. Thanks very much, guys.
Thank you.